Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings, maybe even unravel a few mysteries about your favorite companies, or soon to be companies. Today we're diving into a fresh SPAC filing, something called Pan Africa Corporation. Imagine a company that is essentially a blank check ready to go find a business to buy, probably somewhere in Africa given the name. They are looking to raise quite a sum, and we're going to break down what that means for investors. So Pan Africa Corporation is planning to offer 12.5 million units. Each unit comes with one Class A ordinary share and 1/10 of a right to receive another share later. Think of it as getting 2 bites at the apple for $10 a unit. Now they are aiming to raise $125 million, and that is before any fancy options or fees. This filing with the SEC is the very first step in their public offering journey. It tells us all about their game plan, their risks, and their team. They are being very upfront about what they are, which is essentially a shell company looking for a business to combine with. What is interesting is they were incorporated in July of 2025, which is quite recent, and they are already looking to go public. We see a lot of these SPACs popping up aiming to tap into specific markets, and Pan Africa Corporation is no different, focusing its sights on opportunities across Africa. Their leadership highlights a mix of US financial savvy and on-the-ground African business experience. People like Jide Zeitlin, who was CEO of Tapestry Inc., and had big roles at Goldman Sachs, are leading the charge. They talk a big game about leveraging their networks and knowledge of the African market from Nigeria to South Africa and beyond. They are looking at demographic trends like a growing young population and increasing consumer markets as major investment drivers. This demographic advantage is a huge point they are making. By 2050, a quarter of the world's population will be in Africa, and that is a massive consumer base in the making. They also point to digital innovation and expanding consumer market and abundant natural resources as key reasons why Africa is a hot investment spot. But here is where it gets juicy, the risks. They are very clear that investor dilution is a big deal. Our sponsor bought founder shares for a tiny fraction of a cent. This means if the company succeeds, our sponsor could make a fortune even if public shareholders see their investment value drop. They are practically telling you that a substantial profit for the sponsor is very likely even in a scenario where public shareholders lose money. Let's look at their numbers as of July 2025. Their total assets were about $27,000 and their total liabilities were around $22,000. That means their shareholder equity was just about $5,800. Essentially, they have very little in the way of assets or equity right now, which is typical for a company before its IPO. And here is a kicker: the net tangible book value per S-Hair after this offering is projected to be negative 79 cents. This shows how much dilution is expected right from the get-go. Essentially, after accounting for all costs and potential redemptions, the value attributed to each share is less than what you pay for it initially. Now, the money, they are floating this offering at $10 a unit. In total, they are looking to raise about $127 million before expenses, but here is the catch: about $125 million of that is going straight into a trust account and cannot be touched until they find a business to buy. That only leaves about $2 million for actual operations and deal hunting. If all goes as planned, they will sell 12.5 million Class A ordinary shares in this offering. But the big players, our sponsor and management, already own 3.1 million founder shares, which will convert to ordinary shares. This means even before the IPO is done, our sponsor already holds a significant chunk. These founder shares are crucial. They convert into Class A ordinary shares on a 1-for-1 basis and have special anti-dilution rights. This means if the company issues more shares in the future to complete a deal, these founder shares might get even more Class A ordinary shares, which spells more dilution for you. About that trust account, the money in it is meant to protect investors. If they do not find a business to buy within 24 months, they will give the money back to shareholders, approximately $10 per S-Hair. But if they do find a deal, this money, plus whatever they raise through other means, will be used to acquire it. There is also a clause where the sponsor agrees to cover claims that might reduce the trust account below $10 per S-Hair. However, they also mentioned that they haven't verified if the sponsor has enough funds to actually do this, which sounds like a bit of a loophole for potential creditors. They are also implementing a compensation recovery policy to claw back executive pay under certain circumstances, compliant with NASDAQ rules and the Dodd-Frank Act. So what is the verdict on Pan Africa Corporation? Well, they are setting out with ambitious goals targeting a massive and growing continent, which is exciting. The leadership team certainly brings impressive credentials from the finance world. However, the high risk of dilution for public shareholders due to the sponsor's cheap founder shares and the complex anti-dilution clauses are major red flags. The structure of SPACs itself means investors are betting on the management team finding a good deal and executing it well before the clock runs out. That negative net tangible book value of 79 cents. Per S Hair is a stark reminder that you are buying into a vision, not a proven business. You are essentially trusting the management to turn this blank check into a valuable company. The potential for the sponsor to profit handsomely even if public investors lose money is a recurring theme that demands caution. It's a high-stakes gamble on Africa's future with management's expertise as the key ingredient. If they hit the jackpot, it could be great, but the odds are certainly stacked. Alright, that is our rundown of Pan. Africa Corporation's filing. What do you think about their strategy and the outlined risks? Drop your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more corporate decoding. And don't forget to join our Discord community linked in the description for more real-time discussions. Thanks for watching, and we'll see you in the next one.